Welcome to Beyond Just Money, and we are in conversation with our guest speaker for today, Ms. 𝐊𝐚𝐥𝐤𝐢𝐧𝐞, who is the Director of Research with 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 Pty Limited. The unprecedented and dismal 2020 saw only few quality dividend pairs on the ASX and other global exchanges. Even the big four banks opted to slash or defer payouts. Few shares in the sectors that were heavily affected by the COVID-19 pandemic had to defer dividends entirely. However, for a few dividend shares, revenue and cash flows remained consistent and even improved through the peak of the pandemic in Australia. For instance, soaring iron ore prices lifted 𝐕𝐢𝐝𝐞 Metals Group Limited earnings. The company paid $1.76 in dividends. Hi Hina, we have seen that Bapcor continues to prove resilience and anticipates revenue growth of 25% for the first half of financial year 21. Could you please share your insights on the same?
Hi Samta. So what we are talking about here is that, where do we get dividend stocks and how do we locate such kind of stocks? Investors, they're sitting on the edge and looking out for, the most tipped dividend stocks for 2021, looking at what has happened in 2020. And you rightly said that, with the soaring iron ore prices, Fortis Metals Group was one of the companies that could actually uplift many things and uplift their earnings and the whole scenario. The business got a boost, and of course dividends were paid in a decent way. So banks have taken the hit last year, but now with a little bit of relaxation from APRA, the situation is slightly changing. Now coming to Bapcor, which you have put forth as one of the key things or key stocks to watch, I would say, Samta, that now with the new year of revival, hope coming in, we have a lot of reliance on companies that provide stable businesses or stable revenue generating streams. So what we're looking at is that how you evaluate sales revenue, margins, and cash flows when we are tying something with a resilient business, and then eventually to dividends. Now, if we talk about Bapcor, the annual yield is around 2.26%, and it's trading at around $7, around $7 as on 13 January is what we have seen. Now, Bapcor, it continues to prove to be a resilient business, financially solid business, as per the CEO and MD Daryl Ebotomy. Now, if you look at the business, which runs on the auto parts scenario and auto parts driven lines, it is well known and popular in Australia as well as New Zealand. Bapcor has maintained its FY20 dividend, final dividend, which is at 9.5 cents per share. And much to the delight of shareholders, the full year dividend has been increased by 2.9% to 17.5 cents. The yield may not look very exciting, but I think the way they have, maintained the dividends and then, increased the dividend, it looks to be a good stock from dividend perspective. Now, for the 5 months to the end of November 2020, Bapcor's revenue was up by about 26%, and as per its last trading update provided in December 2020, we have seen that the businesses have been aligned pretty well with the outcome. Then you talk about FY21 and the first half particularly, Bapcor anticipates that there will be revenue growth of approximately 25% over the PCP in FY20. If you look at NPAT figures, which they have projected, that is also expected to increase by at least 50% over the PCP. Coming to market consensus, you look at the NPAT ranges, they are coming along, to the tune of, I should say, $110 million to $115 million. So company will release its half-yearly results in February 2021. I think we all should be glued to see what exactly it's going to bring onto the table at the back of the resilient business.
Right, Hina. And Hina, like if we talk about Tassal, now it seems to target growth in financial year 2021 operating earnings and returns. So if you could tell our listeners about that.
So Tassel, Samta, this has been, this is listed on ASX with the ticker TGR, and the annual yield is pretty decent, which is around 5.27%. It's trading around the levels of $3. Now, if we talk about the this fish business model, it runs with the demand side of things. Annual dividend, we have seen that Tassel has maintained at around $0.18 per share in FY20. There is impressive EBIT growth of 12.7%, which we noted, and this came to around $99.8 million with NPAT figures or growth of around 13.3% to $64.2 million. If you look at Q1 21 scenario, sales revenue, they were projected, or they, came to a level of around $132.4 million, which was kind of up 31% relative to Q1 20. The company recently completed the acquisition of Billy Creek, where it intends to create an enlarged proserpine prawn farming present. Now, in FY21, the company intends to focus on domestic sales and cost, in dollars per kg improvements for salmon as well as for prawns. Besides, the company is as best prepared as it can be when you look at the business overall. Current trading, together with an additional debt facility of around $100 million, seems to be offering further flexibility, and Tassel is targeting growth in FY21 operating earnings and returns. So dividend payout policy of not less than 50% of operating NPAT is likely to be maintained.
If you could just elaborate on �𝐴𝐴𝐿𝐼, which is expecting unaudited NPAT of $40.5 million for the next 6 months to 31st December 2020 as well.
So 𝐴𝐴𝐿𝐼, we all know that this furniture retailing business has been doing well, and 2020 was a good year, so to say, for 𝐴𝐴𝐿𝐼. If you look at the annual yield, we're talking about numbers which come up around 4%. If you look at the stock performance, of course, we have seen it going down on 13th of January 2021. But if I have to talk about the fundamentals, the financials, �𝐴𝐴𝐿𝐼 saw its underlying EBIT margin improving by 90 basis points to 23.2% in FY20. This helped it maintain the underlying NPAT at $42.1 million. For the first quarter of FY21, total written sales orders, they grew by about 45%. Now, the company has opened new stores in Auckland as well as NSW, and they have been performing strongly. The stores, are expected to contribute to profit in H2 21 as written sales orders convert to revenue. Besides, the final dividend grew by 12.5% to 22.5 cents per share. So this brought the full year dividend to 47.5 cents, which is an uptick of around 5.6%. For the 6 months to December 2020, we see that the company has indicated for unaudited NPAT of around $40.5 million, which is kind of up 100% on the underlying profit for the PCP. That's it on �𝐴𝐴𝐿𝐼, Samta.
And on that note, thank you, Hina, for sharing your insights with our listeners. And to our listeners, if you want to listen to this podcast again, please log on to our website, which is 𝐊𝐴𝐼nmedia.com, or subscribe to our YouTube channel. We will see you soon with yet another insightful episode. Till then, as we say, stay apprised and invest wise with 𝐊𝐼n𝐥𝐤𝐢𝐧𝐞, your best guide.